Good afternoon, everyone. Reversals, and we looked at the moving averages, the MACD, some parabolics are there, and the ADX to give us the power. Yeah, so we looked at those and how these trends change, and yeah, yesterday we had some kind of it looked like a reversal for the Euro USD, but it looks like okay, it looks somehow bearish, but it's like a range market. But anyway, let's just keep on watching it and see what happens as we keep on looking for more scenarios where the trend changes. It's very important to know reversals because that's where, by the way, it's that point of reversals where most people lose money. It's very hard to lose money in a range market. It can be frustrating, but you can't easily blow an account. But the reversal, that's what blows most accounts, because price, it starts a whole new trend. Yeah, and that trend is what knocks you out, whether you keep on even some people deposit more money. When you're going, your account is almost blown, sometimes in order to save your account, you add in more money so that you have a bigger gap, so that you add in some, you extend your margin. Yeah, basically you extend your margin. So so when you do that, if the trend is on, if that reversal happened, if you are selling and then the reversal happens and it starts going up, and you keep on extending your margin by depositing more money, yeah, maybe if you continue doing that indefinitely, sometimes when another reversal happens, you can recover some money. But that can be very dangerous. So it's identifying the reversal that will mostly save your account. So it's very, very important to know when a trend has ended, so that you stop putting in trades that are going to hit the stop loss or blow your accounts. Yeah, some people don't. Okay, if you've been trading on margin, you will realize that sometimes the stop loss can limit your account, and stop loss is mostly determined by the price movement, by the formation in those candlesticks and all those other indicators. So that's why you should normally put your stop loss, not just where you want it to be. Just because you're willing to lose $50, you put your stop loss at $50. That is not at negative 50. That is not the right way to do it. Your stop loss must be at the point when, okay, let me give you an example. If you're selling and a reversal happens, so your stop loss must be slightly above that point of reversal that you expect, so that it hits your stop loss and then you continue buying instead of selling. So that normally will save you. Then for the other case, if you're going to trade on margin, then identify those areas and close your trades. You may not be putting a stop loss, but it's good to know where things are going wrong, and then you just close there and you start, you follow the trend. Always follow the trend. So another thing which, stop losses sometimes cause a slow death. You keep on losing small chunks of your money until it's all gone, and that is very, very frustrating. So if you're normally trading in a trend, if you're following the trend, you always put your stop loss below the previous support level. So by doing that, every time price retraces, it can always bounce back into profit. Then you keep on doing that. Then at the last point where the trend has ended, if you continue buying and you put your stop loss still below that area of support, and then you hit the stop loss, there you will get your confirmation that price has now started going down. Now that works very well in very long trends, in very, very long trends, and they're normally caused by fundamental events, rarely by this technical analysis. It's very difficult to get a very long trend just by doing technical analysis. It's normally fundamental because it is price of an economy. So the price of an economy can't just keep on growing just because you drew some lines, and these lines which you normally draw. But it happens because of actual events that are happening in the world. So when that happens, then you have a very, very long trend. So that's where you can actually make some good money on a long trend, and your your stop loss can actually come into play. Now, when you enter a range market, that's where stop loss can finish your accounts. It can finish you in a very, very slow death. You end up losing small chunks of your money. So in a range market, you always sell, expecting it to go down. Then again, it starts buying. It hits your stop loss. Then you start buying. It hits your stop loss down. Then you start selling again. Hits your stop loss up. Yeah, so that can be very frustrating. Or even in very short trends. Short trends can also they can overhit your stop loss. So so what I'm trying to say is keep on watching out for the reversals. That point of reversal is very, very important. Yesterday we saw an example using so many indicators just to see some kind of confirmation of a reversal. And then when it happens, then you can start looking for the continuation of that trend. So today we're going to look at another setup for reversals. This time we're going to use a very popular chart and a very popular indicator. This chart is I'm going to use the US dollar versus the Japanese yen. So the US dollar versus the Japanese yen is the chart, and the obvious indicator for that one is the Ichimoku Kinko Hyo. I think that's how it's pronounced. Ichimoku Kinko Hyo. I've been watching One Punch Man with my son. He's a fan of One Punch Man and Naruto and Dragon Ball Z, whatever those cartoons are. And those guys speak Japanese, so by watching those cartoons, you can somehow catch up on their language and how they pronounce these words. They put a lot of emphasis, especially these small words. Kinko Hyo. It's like it's anyway. So for this indicator, it normally looks very disorganized. So many people look at it and it's just confusing. Some people look at indicators and even just get headaches. So for this one here, this one can give you a migraine if you don't like indicators. But it's something created by the Japanese, and everything is literally created by the Japanese. The candlesticks themselves, the open, the close, the high, the low. They call them Japanese candlesticks. So the ones who created that whole system, now they have this indicator, and it's quite effective when you think about it. But the thing behind all these indicators and setups is they don't work all the time. They don't work all the time. So you may not have to trade every single day. You may not have a trade for every day, or even every week. You might have one trade every month. At maximum 2 trades every month. So that can be, for some people, that is very, very good news. For others, that is very frustrating, especially people who have their trigger. They have their finger on the trigger. In this case, the trigger is the mouse button. Just want to click all the time. And now with phones, you can enter trades anywhere you want, and you can make money all the time, or you can lose your money all the time, because there's a lot of access to enter these trades. So let's take a look at this chart, the US dollar versus the Japanese yen. So basically, I'm loading the Ichimoku Kinko Hyo. Kinko Hyo. It's something quite, it's very interesting. So I'm going to change the color of these candlesticks so that they are different from this. From this, I'm going to put them in yellow. I don't want the colors to clash with, there's this green line in the Ichimoku. Maybe let me see if I can make them a little bit thicker than they are. They are a bit, they are so narrow. So that green line of the Ichimoku, it is, so this green line, it's like a band. Then you have the cloud. So the basic kind of analysis for this Ichimoku is, the basic way to use it. When price is below the cloud, now this is the cloud, where you see this these lines here moving through. That is a cloud. So when price is below the cloud, it's obviously selling. When it is above the cloud, it's obviously buying. Yeah, so by looking at this, when you're having an upward trend like this one, and you're coming to a reversal, there are indicators that show you that actually price is going to reverse. So indicator number one is price, this green line crossing with the price. Yeah, this green line is like a band. The farther it goes away from the price, the more you have a movement in that direction. Then when it comes and meets the price and goes the other direction, it goes below it in this scenario here, then you have that downward movement that is going to start happening. Okay, so we have this green line. Let me get the actual names for all these lines. They are very cool names. If you like watching anime. Yeah. So this green line is called the Chico span. The Chico span. Yeah, that's the green line. Then this red line is called the Tenkan Sen. Then the blue line is called the Kujin Sen. I think I saw my son, he was playing, there's this game called Ghost of Tsushima. Yeah, and people were talking like this, Tenkan Sen, Kujin Sen, Chiku Span, those Japanese language is it's quite interesting. Anyway, then then we have now for the cloud we have the up Kumo and the down Kumo. Yeah, so the up Kumo, this part here, which is a bit, the color is sandy brown. Yeah, and that's the color that comes with the indicator, sandy brown. That's actually a name of a color. If you do chemistry, then you've seen when those chemicals are changing colors. Normally, the instructor tells you this is greenish blue, this is yellowish black. Yeah, so this one here, the up Kumo is called, the color is sandy brown, and this is the sandy brown color. So you can see this cloud has two ends. It has this top here, which is sandy brown. Then the lower part, the color is Thristo. Yeah, it's the first time I'm seeing that color. I've looked at this chart so many times, this indicator so many times, but the color Thristo, that name, I've never caught it. Yeah, it's the first time I'm also seeing it. So the color is Thristo. Now this could be a very new color among all the colors that we have. So, we just take it the way it is. Yeah, so the down Kumo, the color is Thristo. it is something looking like whitish purple. Yeah. Now, when it changes, you can see that Thristo color has now taken over the cloud. So we have the sandy brown below, and then the Thristo is above there, and that whitish purple, whitish pink. Yeah, okay, so the first indicator that price is starting to reverse, it's still moving upwards from this point, but price goes below the Chiku span, which is this green line. So the Chiku span, the Chiku span goes below the price. Yeah, so when price is bullish, the Chiku span is above the price. So that's what gives you that, that's what gives you the confidence that price is still bullish. But, price is still moving on, it's still bullish, but the Chiku span has gone below the price. And that's the first indicator that you're about to have a reversal using this Ichimoku Kinko Hio. Yeah? Now, there are two other indicators here which look like moving averages. Yeah, so the red one is the Tenkan Sen and the blue one is the Kijun Sen. Now, when the Tenkan Sen is above the Kijun Sen, so this one's here, when red is above blue, then you're having an upward movement. So here, it's still bullish, moving upwards, but the Chiku span has already gone below prices. So there you have to start watching out for a reversal. And now as price is headed up there, it starts, the effects start coming in. So, this price now shoots below both the Kijun Sen and the Chiku span. The Tenkan Sen and the Kijun Sen. So price goes below those two. And Yeah, but then the cloud, the cloud is still sandy brown, and it's still giving us that bullish signal. Yeah? So price is still, this Ichimoku, the cloud, is still showing us that, it's still bullish. And, if you just enter anytime from there, when, this, you can easily have a fake out in this scenario. Price can still continue moving upwards, and you can start, losing money. So you have to wait for the whole scenario to play out. And this is actually a very perfect scenario. So you can look at how these indicators have started crossing each other. Yeah, so price here has now moved below the Tenkan Sen and the Kijun Sen, and now we have these two. These two have now reversed each other. Yeah. So this Chiku span is still above the cloud. Here it's within the cloud together with price, but we already have the Kijun Sen above the Tenkan Sen. So when price was bullish, red was above blue. Yeah. Now blue is above red. Yeah? So there, things have started turning around. Already, the Chiku span, the green line has already gone below price, and we already have, that's the first indicator, but, it's not yet firmly below price. Here it is, but it is still above the cloud. So we need all these indicators to go below the cloud so that we have our final indicator that, we're actually moving in that direction. So if you look at how, how things are playing out here, there's a lot of confusion. Then, then the outcome, let me close this. Yeah, so at this point, we have our confirmation, actually, when the cloud changes. So here the cloud has changed from sandy brown to that whitish purple. And yeah, so that's where we are right now. And so you have this green line very far below the price, as it should be. You can see how when it was bullish, it was very far away from the price as well, like some kind of band. And the same thing here, it is very far below from price. The cloud is no longer sandy brown. It's now three-store, yeah, that whitish purple color. And we have this, we have the blue above the red, and price is firmly below. So in that scenario there, we have, we have a technical confirmation that the reversal has taken place. Yeah, so there are so many indicators that show you that, this upward trend has ended. There are so many things here that show you that, do not buy, do not buy. And you can see that in this area here, there is some kind of a range market. So from the point that you get the first signal of this Chiku span going below, there are many candlesticks there. They are about 65, let's say 64. 64 candlesticks. Those are almost 3 days. Those are almost 3 days of watching that. So that is a whole 3 days of doing analysis and just waiting to enter. Yeah? And the beauty about it, the moment you enter, you have this, you have the first signal of price showing you the reversal. So when you enter here at this point, you're going to collect some, to this point here where you get the first signal of a reversal, when things start going wrong. So you can close there and you've made like 100 pips of USD JPY. Yeah? So there, you close your trade. Now, that's what I was talking about. Your stop loss, if you start selling here, your take profit can be above this. Your stop loss can be above this, because you started selling there. So if price goes against you, then 42 pips, that's the area of your stop loss. Because if price continues and goes above that resistance up there, then you have a confirmation that the trend is continuing upwards. There's no need to continue selling. So your stop loss can be there, then you enter a buying trade and you continue with the trend. So if you put your stop loss somewhere below that, there are many scenarios where you can get hit. Here price just continued downwards without any reversal there, and that is good. And your take profit also must be determined by the market conditions, the way we started tracing the reversal from here. When we start tracing the reversal again, that's where we put our take profit, and that's how you make more money. Because if you were to take profit somewhere here, you might be looking for, maybe you have maybe you have $1,000, and you're looking for about, let's say like $100. So at this point here, you will put your take profit, and you'll make $100 from there. But the trend is still continuing, and if you look at the formation of the Ichimoku, we still have all these indicators still giving you a very strong selling signal. So you are going to lose money from there. You're going to lose money that you haven't made. You won't lose money from your account, but you could have made a lot more money. But if you continue, then you make twice that amount. Instead of taking the 50 pips, here you take 100 pips, and then you have $200 on your $1,000. After getting this signal that the Ichimoku has started, these conditions have started again crossing. So from behind, from the back here, so from the back, you can see that the first signal for the reversal, in order to sell, was this Chiku span crossing below the price. Then, signal number 2 was the Kujin Sen going below the Tenkan Sen, and the last part was the cloud turning to color 3 store, turning to the color of whitish purple. So that point is where you get your sell signal, and then you start selling. Because you stopped buying from that point, so you have to start to stop selling again when when these indicators, when they start again, the formation starts changing again, which is down here where there's a take profit of about 100 pips from where the entry point is. So at that point, so at this point you have the Chiku span. So when the Chiku span is below the price, it's pulling it down. In a matter of sense, it's pulling it down like a band. So it's pulling it down, but when it goes above it, that's where the reversal starts happening. It starts pulling price above, and then you can see here there is some kind of a range market starting to form. So here you have the Chiku span has gone above price, and if we continue looking at what happens afterwards, the Chiku span has gone above the price, and then we have this one here start changing again. But now this is where you get some kind of a fake signal. But here you can see there is no entry point. So you had here the signal to get out of that trade. Now you're going to look for another trade based on those same market conditions, and you won't get them here because the cloud has changed to a bullish cloud, but the Chiku span is still below the price, and the Tenkan Sen is above the Kujin Sen. So you have some kind of it's sort of confused. Here when price became bullish, the cloud is still whitish purple, so you don't have a clear signal to buy. So now this whole point here, it's all this whole area here is like a range market. So there is no clear signal here given by this Ichimoku indicator, and it goes on like that and that and that. You can see how it is sort of a range market. There is no clear there is no clear signal. There's no clear signal, and so that's where the problem is. So basically those are the indicators that give you that those are the indicators that give you that price movement. That's how the Ichimoku works. So there's one more thing. There's one more thing here. Let me get the period to this Chiku span. So this is what kills most people. That's what kills most people. So this Chiku span is it's 15 periods behind. 26 periods behind. Yeah, so when you look at your Ichimoku indicator, this is one bit that frustrates most people. So you have so you have this green line that is 26 periods behind, and you have to use it as well to give you a proper indicator. So here where it crosses below the price, you can look for the 26 period. So this is why we have the 26 periods. Yeah, 26 periods. So where you have this this signal here to enter. Yeah, so at this point, you can clearly see that it is below. It has gone below the price, clearly below the price, below the cloud, and already we have this formation there. So this one here, at this point here, you have your kind of confirmation with this 3. You have it with a cloud, and you have it with these other 2 lines here. Then this one here, 26 periods behind, will also give you that signal there. Yeah, and yeah. So that is something to clearly watch out for. If you look at this area of reversal, let's look at 26 periods there. Yeah? So you can see how price has fallen with this candlestick, where the reversal has started happening. Yeah, but okay, this gives you some kind of feel that the reversal is coming. Yeah, so basically, the Ichimoku, okay, that's basically how it works. So you have 26 periods behind this that give you the signal to enter. Yeah? So the signal, if you entered this trade, let's say from around here, yeah, because you have the formation happening here to buy. Yeah? So you have your formation there, and you go 26 periods back, and this one is clearly above the price, and then these ones here have formed, then you buy. Yeah, so there you have your clear profit up to like let's say if you bought from up there, price will trace down about 16 pips, then it will continue about 70, 80, yeah, maybe, okay, up there. So at those if it comes back down, maybe you take about you can take a hit. There's no hit there. You take about 70 pips there, yeah, until this period here starts showing you some price moving above this green line. I hope that is very clear. I hope that is very clear. But that's how you use the Ichimoku. That's how you use the Ichimoku to actually give you these signals. I think that's the only chart we're looking at today. Yeah, so basically for reversals, it's very important to look out for those reversals and to know how these indicators work. Every time you load that indicator there, the Ichimoku has some periods behind it that it gives you some time. Okay, the price movement keeps on mapping out that indicator, but some periods behind, and others are some 2 periods in front, 3 periods, but you get used to it as you go on, looking at scenarios where it has actually played out. And if you look at the history of most of these charts, they will show you the most appropriate times to sell or to buy using this indicator. And that is something that you should really look out for. It's not good to enter trades all the time. Look out for that optimum time that this trade will actually work, because if you just enter any time, then price will go against you and you will lose money. So you realize that you have very few trades in a month. You have very few trades, maybe 1, maybe 2, those very, very accurate trades. And that also applies to the risk ratio, to the risk factor. You have to use the right lot size for your account so that you don't lose all your money when you trade like this. So you have very few trades in a month, but those trades also make a lot of money, and that money will come in maybe in about maybe a week, maybe 2 weeks. Yeah, so you can you can have comfort trading like that. But if you put in a very small account and a very big lot size, you're bound to lose money using these traditional trading methods. So that is one way of using the Ichimoku. Okay, like the traditional way of using the Ichimoku to predict a reversal and a new trend, so that you can make some good money and you trade an entire trend, and you get all the pips in there, and you trade with a lot of comfort. Yeah, so same thing, I'm working on a robot for this particular indicator. Yeah, so the robot will not be trade. There won't be very many trades, but all the trades that will be there, I'm very hopeful that there will be very positive trades. Yeah, I'm very hopeful for that. Yeah, and the stop loss, the trigger to close the trade will obviously be when that green line crosses the price. Yeah, 26 periods in the history. Yeah, and that is something that I'm going to test out for a very long period, and I will put that I'll put that on the Telegram group as well, and you see how it works, and we shall we shall gauge it. We shall give it points as a group. Everyone is free to give their opinion. If you feel that there is a lot that can be added to it, then by all means you can make it a lot better. Yeah, and then we can improve it like that. And yeah, I'll be showing that on Telegram groups so that we all have a conversation about it and see how to improve it, how to rate its risk and maybe increase the risk factor or reduce it. Yeah, if you're not part of the group, you can just search for Trading Dawn, or you can search for BVB Trade FX, and you'll just get there very fast on Telegram. And you'll have access to an entire community that is trading and sharing so many ideas. And people are now starting to do very well on the group. People are making money. People are learning how to even do the simple things. Choosing brokers, depositing money, withdrawing, which brokers are very nice for our payment methods. Yeah, there's all that information that is going around, and it's very helpful for anyone who wants to start trading. So, just join the group, just search for Trading Dawn or BVB Trade FX on Telegram, and you will get there. Yeah, so today, the economic calendar events really, they ended with the euro. That was at midday, and we shall look forward for tomorrow. Yeah, so thank you for watching. Have a good day. Goodbye.